Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day. The next VRIC is coming up January 21st and 22nd, 2024. Stay tuned for tickets to that. But for now, we're keeping the channel going with some great guests for you guys. And speaking of which, today's guest is the Managing Director of Strategic Wealth Preservation, a premier precious metal storage facility and trading company located in the Cayman Islands. It's Mark Yaxley. Great to have you on the show.
Thanks for having me. Happy to be here.
Yeah, happy to have you here. I want to start with the reasons why investors should have an allocation to silver and gold bullion, because there are those who see it as a speculation to earn profits, and a lot of them are pretty vocal in the comments section on YouTube when they don't see the metals moving. But there are others, myself included, who see it more as an insurance policy and a way to store wealth outside of the traditional financial system. So, in your opinion, what are the main reasons to stack physical precious metals?
Well, I'd start by addressing, Jesse, that it certainly is not a speculative investment. It is deeply rooted in our culture. It is a proven asset class. So there's not really anything speculative about it. I guess what people are alluding to is that they're expecting maybe higher or exaggerated returns. And that you might see, for example, in the crypto market, which in my opinion would be a more speculative investment. So I just want to address that, up front. In terms of the role that it plays and why, I've been a fan both personally and professionally of gold. I think you nailed it on the head. Most people would consider precious metals wealth insurance within their portfolio. So it has, as you know, negative correlation, generally speaking, to the stock market and to the US dollar. So when in times when the stock market is performing well or there's a strong USD, gold is going to trade sideways or slightly down. But inverse to that, when you see a recession looming or the stock market is not performing or the US dollar is weakening, as we are seeing right now, gold is going to perform very, very well. So in fact, what it is a hedge against other other traditional assets that you're probably holding in your portfolio. And everybody should have that hedge in place. But don't buy gold and silver to get rich. Buy gold and silver to protect your riches.
Yeah, that is very well said. And I want to discuss vaulted precious metals because a lot of gold and silver bugs repeat that mantra: if you don't hold it, you don't own it. Do you think it's important to have some amount of precious metals within your own possession and then perhaps vault the remaining quantity based on a certain amount, perhaps for security reasons? And could you speak to the security measures employed by a company like your Strategic Wealth Preservation and how investors could take delivery of their metals if they need them?
Sure, a lot there. So I'm definitely a proponent of holding some precious metals close to home or at home. I think that obviously it's important to have them, for that worst case scenario possibility. However, there's probably a number that you'd start to lose sleep over at night. If you're, and I always say that to clients. I say, at what point should I consider storing my precious metals in a secure storage facility? And I say, well, you should start considering that as soon as you're losing sleep over having too much precious metals at home, because the reality is that your precious metals at home are likely not covered in your homeowner's insurance policy, or only a very limited amount, like $1,000. So anything above that, if there were to be a crime or you were even a family member, if you have teenagers, you have to think about things like that. They take off with your precious metals. You're not getting anything from your insurance company. That's one thing to think about. And so that leads you eventually, when you accumulate enough precious metals, to the conversation of storing them in a secure storage facility. I think the old adage of, you don't hold it, you don't own it, is a little bit misleading, because if you are contracting with a secure storage facility like SWP, for example, where we are allocating your precious metals, your bars and coins, to a segregated storage bin that is yours, under the law, legally speaking, that's considered personal property. It's not our property as the vault operator. It's your property as the owner, legally. So you are the owner of that material. You have full right and full control of that material. And that leads to the last part of your question is, if I want to take delivery of my precious metals that are held in a vault, whether it be in the Cayman Islands or in Toronto, Canada, of course, you can do that. You simply have to send an instruction to the vault, and they'll arrange to have the metals returned to you. In terms of security, look, I mean, generally when you're talking about vaults, if you're dealing with a reputable vault operator, that vault is going to be a purpose-built building. It's going to have a class 2 or a class 3 vault within that secure building, you're going to have all the bells and whistles, alarm systems that come along with operating a facility like that. So, those buildings are really built solely for the storage of precious metals. Therefore, they tend to be very, very, very safe places to put your gold and silver, probably safer than your bank safe deposit box or your safe at home.
Great. Well, I'd like to move into the macro picture for the precious metals now, starting with gold, because we're seeing gold pretty consistently hovering around the $2,000 level, but that's just in US dollar terms. A lot of people forget that gold has already reached all-time highs in a number of other currencies, and so has done a great job of protecting purchasing power, for example, in a place like Japan. So, what do you think the main drivers are that have led to this current resurgence in the gold price? And do you think we might see all-time highs in US dollar terms and perhaps beyond even here in 2023?
Yeah, so there's two main factors, really. It's not a very complex answer, but two factors that I look at when determining, why the price is moving in the direction that it is. Number one is obviously demand. You have to have strong demand for the price to rise, as it has been recently, and continue to rise towards new record highs. That demand is going to be driven by three segments. You have the retail investors, investors like you and I can tell you, working in the retail space, that demand right now is as good as I've ever seen it in my career, 17 years in the business. It's very comparable to what we saw during the 2008, 2011 financial crisis, and also during the COVID crisis. Tons of demand. Premiums are very, very high right now. And when you have high premiums, that's a direct indicator that there's strong demand on the wholesale and at the retail level, because that's when retailers and wholesalers can charge as much as they like effectively for certain products. The second segment is the central banks. We've been seeing solid central bank buying since COVID, really, by a fairly small group of countries, but it's been very, very consistent. And so that's a net ongoing demand for gold. And then more recently, we had seen the ETFs shedding their gold positions up until very recently. I haven't seen the March numbers yet from the World Gold Council, but I suspect that ETF sales are going to be strong given the current market conditions, given that there is an upward trend in the gold price right now. So basically, you have all three segments that are buying right now. And why they're buying, that's driven by economic uncertainty. You've got bank failures recently that, those headlines were really, not only in North America, but also in Europe. That's a contagious headline that really had people fearful and running to safe haven investments. You've got an underperforming stock market and a general consensus that we're either in a recession or heading towards a fairly strong recession. So again, those are all very positive for gold, not to mention there's a war going on in Europe, and US and China are at each other's throats right now. So a lot of reasons why people are looking at gold. And the second part of it, really, really simple, is you've got a weakening US dollar. USD is weaker, gold price is higher. That's a direct correlation. And the US dollar is coming up its 20-year highs. It's currently probably about 5% over its long-term median price. And as it continues to retract towards its long-term median price, that's going to be positive for gold. So based on that alone, you probably got gold sitting at 2150, 2250 conservatively this year. And then if you throw in some black swan events or any kind of escalations in the current scenarios, you could easily see new records for gold this year.
Yeah, it does indeed seem like the perfect storm at the moment. And I'd like to get your thoughts on silver as well, because silver is a metal that traditionally outperforms gold on a percentage basis during precious metals bull runs, at least for a time. So do you think we'll see something, should the price of gold go to the targets you've mentioned, do you think we'll also see silver once again outperform on a percentage basis? And I wonder if you look at silver strictly as a monetary metal, or if you also factor in its industrial use, especially since it's increasing now to its use in green technologies.
Well, you certainly have to factor in all usages and consumptions of silver into the equation. It does have a growing number of industrial applications, but that growth is, year over year is relatively steady. You might have a growth, of 5 to 10% in a year, and that would be a pretty big year in terms of industrial demand for silver. So that will be relatively steady. What will be volatile is the investment demand for silver. It's a very tight market. It's a relatively small market. So, that's why the price is so reactive and so volatile in either a bull or a bear market. And to answer your question, do I expect it to rise faster than gold in percentage terms during this current bull market? Yes, I would expect that to continue, because that's historically always what's happened with silver. And if you look recently at the numbers coming out of March, I think gold was up just under 8%, and silver was up just under 15% in the month of March. So that's a perfect example. Basically outperformed gold, 1.5, 2x during the last month, and I would expect that to continue. So, we're trending slowly but surely towards $30 silver. Not going to make any promises, but if gold does hit the numbers that I mentioned, then $30 silver is very realistic.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
So platinum and palladium are two metals that are not very much discussed. I've talked to some people before about them. They've generally dismissed them as speculations. I wonder if you have any thoughts there. Does Strategic Wealth Preservation personally deal with any platinum or palladium bullion? And do you think there's any opportunity there? Do you see, obviously, it's not the same thing. It's not a monetary metal. It's more of an industrial use case. But do you see any opportunity in those two metals?
I think there's certainly opportunity. The issue is those two metals are tied directly, aside from investment demand, which is relatively low compared to gold and silver. We sell a lot of precious metals every day, and only one maybe out of 20 orders will involve orders for platinum or palladium. So it just gives you an idea. Those are not metals that the average person is thinking about investing in, maybe because they don't really understand why they should be investing in them. But the bottom line is those two metals are tied to the auto industry, to catalytic converter production. And so those will correlate directly to kind of the global economic picture and the demand for automobiles, not only in North America or Europe, but also in developing countries, China, India, places where they're starting to regulate the output of motorized vehicles. That ties into the EV conversation. So maybe there's some headwind there for those metals. But long story short, I've always said to people, look, if you're building a well-diversified precious metals portfolio, you want to include as many of the precious metals as possible, including rhodium, if you can find some at a fair price. So if you allocate 5% in platinum or palladium, it's not going to do you any harm over the long run, because those metals can go on their own bull runs. We've seen that with palladium in the past. I remember when I started 17 years ago, palladium was trading at $400 an ounce. And as recently as 2020, I believe it was $3,000 an ounce US. So there is a lot of potential upside for the metals, but it's driven primarily by the auto industry.
Yeah, I like that. Looking at it as more of kind of a speculation within the precious metal space, having gold and silver as sound money, and then platinum and palladium is a bit more of a speculation that maybe could give you some great upside there. You mentioned premiums earlier, that you've been seeing them at really high levels. So I'm wondering, especially these days, silver seems to have quite a high premium. And I wonder how people looking to purchase bullion can navigate premiums and find the best value for their money. Is it a matter of trying to wait until premiums go down, or how would you say the best way to approach that is?
Well, you're absolutely right. I would say, in all the time I've been doing this, I've rarely seen premiums increase as quickly as they are right now. We're basically, receiving from our wholesales and distributors a daily list of all the products that we can purchase, and every day I've seen premiums go up. Now, it's not always the same products whose premium is going up, but there are increases daily, sometimes twice a day. Generally, in a normal market, we might see one revision per week, not one per day or two per day. So premiums definitely, about as high as I've ever seen them. I mean, Silver Eagles are wholesaling right now at about $13 over spot, which puts them retail somewhere between 15 and 20, depending on who you're buying your Eagles from. You want to steer well clear of products like that, generally speaking. So to answer your question, where is the value? Only because premiums are generally high doesn't mean they're as high for certain products. For example, you can have a 1 ounce Silver Eagle, selling at $15, $20 over spot right now. You can have a 1 ounce silver round selling at anywhere between, $4 to $5, maybe $6 over spot. They contain the same amount of silver. Yes, they have a different branding on them, but if you're simply looking at the silver content, you have a very significant savings just by picking an alternative to those sovereign mint coins. So in markets like this, generally, there are opportunities with private mint product like rounds and private mint 100-ounce bars. If you're looking to save a few dollars, that's definitely of good value. And generally speaking, or almost always, gold is going to have a lower premium than silver anyway. So if you're approaching your investment just from a premium standpoint, you might want to focus on gold. Like for the majority, maybe 60-70% of your investment, and silver maybe 30% to save some premium. And then on the gold side, yeah, try to buy bars if possible, and try to buy as large a bar as you can possibly afford in order to reduce your cost.
And what would you say to somebody who's new to physical precious metals, who's looking to start their collection to get into purchasing sound money? How do you think the best way to approach it is? Do you think it's best to take the approach of the smallest premiums possible? Should they be paying attention to what kind of silver or gold coin or bar they're purchasing? How would you say the best way to approach it? And also, would you take the method of dollar cost averaging, or do you think it's important to watch the price and buy on the dip, so to speak?
Look, if you can time the dips, then you should be a professional trader. I don't think the average person, including myself, who has a normal job and is spending their time, focused on their private life and their professional life, is really going to be able to effectively buy the dip. So dollar cost averaging is a great approach, especially for precious metals, because over the long term, precious metals are a relatively stable, kind of slow growth market. So you don't, have to be necessarily too worried about buying on the dip, especially if you're going to be buying and making multiple purchases over a period of time. That's a good starting point. And, yes, there are some basic rules. Gold has lower premiums than silver. Bars have lower premiums than coins. And the larger the bar, the lower premium you're going to pay. If you follow kind of those 3 golden rules, you will save some money. But I would say to first-time buyers, the most important thing is dip your toe in the pool. It's probably not going to be your last purchase. It's probably not going to be the largest purchase for precious metals you ever make. Just get started. Once you get started and you hold that physical gold or silver in your hands, I think you're going to start to understand the power of this stuff and what it can do for your family and your generational wealth. And so I would just say start somewhere, whether it be your local dealer or a small online purchase. Get that out of the way, and then start thinking more strategically about your future purchases.
Yeah, that's great input there. There's a magical feeling holding gold and silver in your hand. Definitely, it changes your mentality in a way. It's almost like a primitive sort of psychology that comes back from humanity's thousands of years of using gold and silver as sound money. And I wanted to get your thoughts on the World Gold Council launching Gold 24/7, a gold-backed token using blockchain technology along with the existing tokenized gold products and silver ones that exist. There's a few of them. So what are your thoughts on this kind of technology? And do you think it could facilitate a return to a gold or silver standard at some point in the future? This is every gold bug's dream that someday we're going to be using gold and silver to transact again. But I don't know if that would necessarily be practical using actual gold and silver coins. So do you think this sort of technology might facilitate that sort of thing?
I don't personally. That's just my personal opinion. I don't think that the gold and silver markets are large enough to allow today's global economy to operate realistically with a token that is, or any mechanism that consists fully of a backing of only gold or silver. Obviously you'd have to reprice the assets, and the new prices would be extraordinary, and we'd all be very happy as holders of gold and silver. So I think that's why people kind of fantasize about that happening. However, I don't think it's realistic, and especially when you factor in governments and the decisions that they make and how they decided to run the world. But we do welcome technology and innovation. Personally, I've worked on several tokenization projects that involved gold and silver, so definitely open to the concept. I have seen some shortcomings, and the first thing I wanted to address, and I put quite a bit of thought into this question that you sent across to me, Jesse. I think, first of all, the concept that tokenization is easier or somehow makes buying gold or silver easier is a little bit misleading. It's actually really easy to buy gold and silver right now. It's a very mature market. People have been transacting in gold and silver for like 6,000 years. So we've worked out a lot of the kinks, and it's as simple as, going down to your local coin dealer or sending an email to your broker or picking up the phone and calling in to place an order. That's not very difficult, right? So the idea of reinventing the wheel, tokenizing gold and silver, and somehow this makes your life as an investor easier, I would argue is misleading. The second thing that I've noticed when I look at tokenization projects is the sum game tends to be to make it as cheap as possible. So they're like, in order to make this attractive, we're also going to make it very cheap. And you know, that's kind of like the mindset of the marketer in this scenario. And cheap is not always good in the gold or silver world. Cheap tends to mean that you're getting an unallocated, you're entering an unallocated program, or at least an unsegregated program, which means you're either sharing larger bars, you're only a shareholder of those bars, or in fact, that position might be backed by like a futures contract or another paper gold or silver product. That's not always a good thing. So you need to read the fine print and understand exactly how these tokens work. And the last thing is, look, to own and hold tokens, you need some basic understanding of technology. You know, even a guy who's in his early 40s, I've struggled at times to understand how to send and receive tokens. I've lost control of tokens because I misplaced my password at one point. So for people who are in their 50s, 60s, 70s, who are looking to invest in gold, especially large amounts, I'm not sure that holding tokens is necessarily easier or more practical than owning physical gold and silver.
Yeah, very good points. Thank you so much for joining us today, Mark. A ton of knowledge shared. For those who want to learn more, could you give us some more insight into strategic wealth preservation and anywhere else you'd like to direct people online?
Sure. Yeah, swpcayman.com is our website. We're a precious metals dealer and vault operator. So we sell precious metals and keep them safe for our clients. And I would recommend, if you want to learn more about precious metals, you know, aside from educational interviews like this, you can check out our YouTube channel. We do a series called Inside the Vault, which is all about education on a variety of different topics related to precious metals. So a good starting point for people who are interested in learning more.
Yeah, actually, before I purchased my first silver several years ago, your YouTube site was extraordinarily useful. I watched several of your videos, got to learn everything about it before I made my purchase. So I definitely recommend that to people as well. Thanks so much again for joining us, and definitely hope to have you on again before the next VRIC. Are you going to be at the next VRIC?
I hope so. As long as I get an invite, I'll be there.
Yes. Okay. We'll make sure to send you along an invite. So looking forward to seeing you there. And yeah, let's definitely do this again before then.
Absolutely. It's been a pleasure.